10-year note yields nudge higher midweek, today getting all the way up to 419, but failing to get back above 420 for the first time since March 5th. That was just prior to the Fed's semi-annual testimony to Congress. Now today we did see a range of 412 up to 419, about 7 basis points, and what was a lackluster news day. However, we did have a 30-year auction, which was well received with stronger bid to cover. That counters yesterday's lower demand 10-year note auction that we saw. Now, yields did settle higher today, and what we are is between the big inflation prints of the week. Yesterday we had CPI, which came in stronger. Tomorrow we get PPI. So as we gear up for tomorrow's big inflation data part 2, we see yields nudging higher again, closing at around 417 today. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will notice that volatility has been trending lower. In fact, right now is hovering just above the 1-year low close. Now, this despite the fact that yields were higher today. Historically and typically we see yields moving higher, we see vol moving with it. We did not see that today. Vol was actually nudged lower despite the fact that yields were higher. Lastly, let's talk about what we do have tomorrow. Tomorrow's Thursday, so we do get our in-the-moment look at the job market via the claims number. As I mentioned earlier, we also get PPI, the second installation of our inflation data this week. Alongside that, we'll also get retail sales. So a lot going on early in the morning that could push the market, obviously, in a big way. So midweek, we see yields creeping higher, not quite getting up to 420, ahead of tomorrow's claims, PPI, and retail sales.